Hey, how you doing? August 1st, 2024. I'm Shane Oglow, along with my partner Richard Hodges for the Rogue Traders, deribit live this Thursday, August 1st, 2024. First day of August. It's hot. It's real hot.
Yeah.
Actually, I had a friend in Ukraine message me, and she said it was quite cold. The last 3 days, that like turning on the heat. For some reason, they got a bit of a cold snap there, which is kind of interesting because normally it gets damn hot, especially when you get into August out there, inland. But those things happen. Okay, we're going to wait for some more people to roll into the room. We got more people coming in all the time.
So how do you like my new lamp behind me?
Your salt lamp, your Himalayan salt lamp. Yeah. Yes. Well, you're quite salty. Actually, we've got a salty theme I'd like to talk about today in a little bit. So, yeah, we've got some. It looks good.
You are the king of the segues, Shane.
Thank you very much.
And how's my sound? Because people were moaning that my sound was low in other broadcasts.
It's okay for me, but it's always okay for me with the headphones for some reason. But I think you turned up the gain and you fixed that.
Yeah,
so hopefully that'll be good. So who do we got with us today? Giandrea. All right. Vladimir, Johannes, Andre. Excellent. Good to see. You can always say hi if you want to. For those that are new, we just talk about stuff for a half hour. Just stuff. Random stuff with Bitcoin and Ethereum and options and our thoughts. We should make it like Seinfeld, like a show about nothing.
Right.
And actually, I was honestly thinking today we need to have less seriousness and maybe more entertainment with the serious element because, I don't know, there's a lot of people out there can drone on forever about numbers, but I want to be entertained. I like entertainment. So we'll see if we can. Maybe I'll mock you a little bit more than usual, perhaps. Maybe that would entertain the crowds. What do you think?
I think they'd be delighted. Yeah.
Yeah. Hey, interesting. So you're obviously from those isles of the British nation. Did you know that Britain abolished slavery on this day, 1834?
Is that right?
Yes. They abolished slavery in the British Empire. Interesting fact. There's more slaves
from there after.
Yes, absolutely. There's more slaves alive now than in any point in human history.
Is that right?
Yep. And we know where they're all at. We're not allowed to talk about it, but hey, everyone else is bad. Another couple of interesting things. So, Jerry Garcia from the Grateful Dead was born today, and also one of my favorite writers, Herman Melville, one of my favorite American writers, and he wrote Moby Dick. Now we can almost have a salty theme. Get Casey Jones, Davy Jones. Kind of a theme there. You know what I mean?
Yeah.
No.
You
read Moby Dick, I assume.
I did a long time ago.
Herman Melville. Yeah. I'm not going to get too far into that. But speaking of giant dicks, let's jump into the slides because this is very, very important. Trump versus the Dems. I'm sure all of you watched or heard of the Bitcoin conference in Nashville. I think I said it was in Nevada on last week's call, but it's Nashville. It's one of those N words. All the same thing if you're not an American. And that was very positive for crypto. Very, very, very positive. And of course, and we can talk about this a little bit more later. Of course, 2 days later, what did the Democrats do? Well, they transferred all that confiscated Bitcoin. I think there's like it's a billion or trillion
like
worth.
60 billions worth. I think it was.
I think they got most of it from Silk Road, if I'm not mistaken.
There was some of the Silk Road money, They transferred.
And they moved it into a different wallet, which is a giant dick thing to do. Because it may be wrong, but it certainly appeared it's like we're going to screw Trump no matter what. It doesn't matter if we screw millions of people, but as long as we get Trump. So that was a giant dick move as far as I was concerned. And I'm not necessarily defending one or the other, but it certainly appeared to be a big move. And then, of course, it led to a lot of volatility. Then we had a little bit more rhetoric and hostilities and events happening in the Middle East, which seemed to put pressure on Bitcoin. We'll go over that chart in a little bit. So it's been a very interesting week. Our accounts are down a little bit in equity. They're the Synth Miner account is for sure. A lot of the other accounts are as well because they're usually long oriented slightly.
Interestingly, our prop books are down as a result. Well, post speech, right? We got to all time highs actually during the speech.
We did.
But we're suffering a bit now because we're super long orientated. But in my systematic books that I do for funds, we had a really good month.
Good.
It was a really flat month in terms of earnings for the first 2 weeks, and then once Trump's ear got shot, it was epic. We got loads of money out of that.
Yeah. If I'm not mistaken, I think you posted on LinkedIn a little update. So if anybody wants to check that out, you can check out Richard Hodges on LinkedIn and see that little update about one of the accounts he does for funds. So let's take a look at our Synth Miner account. This is the account that we created at the end of February specifically for you guys. It's an account that's designed to synthetically mine Bitcoin because we've got this long-term vision of Bitcoin going up in price. We want to have as much of it as possible. So we're long oriented. So we're going to get hurt a little bit when it comes down, and we have to manage that. But that's the way she goes. So we started off with 0.0825 of a Bitcoin. Current Bitcoin cash is 0.1122. So we're down a little bit from last week. Equity 0.1046, down from last week. We've increased our Bitcoin about 27%. I think we were around 31% last week. So down a little bit. Cash up, but if we annualize that return, we're up about 85% annualized. Last week was 99%. That number is going to swing around. Now, if you are hodling, if you just went and hodled, you bought at the exact same time as we did at the end of February, well, your return is about 6%. Let's take a quick look at the chart. You can see today's number. I plugged in today's numbers about an hour ago. A little bit of a down move, but we're sticking up near the top of that range. We're recently at all-time highs, as Richard mentioned. And the bottom red line is hodling. Hodling is never going to move in terms of the amount of Bitcoin you have because you bought the Bitcoin in February and you're just going to hold it no matter what. So we're greatly outperforming hodlers. Let's take a look at the US dollar return. Hey, it's still looking pretty good. We're up in the trend line. We're not at all-time highs, but that's the way she goes, right?
That's 30% for, is it half a year? It's, I mean, if you put your money in a hedge fund and earn 30% in 6 months, you'd be overjoyed, right?
Overjoyed, indeed. So let me just, why did I bring up the chart? We'll just take a look at Bitcoin. We can chat a little bit about it. Then we can get into maybe the conference. We could talk a little bit about that. And we'll do a little bit of trading too, because I think in the synthetic miner account, we want to make some adjustments, some in the money puts. And we can talk about that strategy. And for anyone who wants to watch us trade live, we do every day. We do a live stream every weekday, sometimes on weekends. You can check us out at patreon.com, Rogue Trader Academy, or just go to roguetrader.academy. And you can hang out with us over there. Let me share my screen. Where the hell is it? Here it is. All right. I assume you see that.
I see it.
This is the silly chart. So, I mean, here's where we had the Trump stuff happening, right? Like the speech. All in that area. We had a bit of range of volatility. I was actually expecting a little bit more volatility. I was expecting it kind of to push up over 70K, maybe a 71, down to 66 as a little bigger swings. But I think that the events of the day with RFK talking first and kind of pre-positioning things got people used to the idea. That's my thoughts. And then, of course, we had the big drop down. And if we want to talk about, I mean, this here is let me move this up so I can see. This is the 29th, Monday the 29th. If we want to take a look at the size of this kind of tip to tail up to basically this morning, I mean, we're talking almost 10%. I mean, that's nothing to sneeze at. If we talk about when this, the Middle East stuff started to break out and get escalated, I mean, we're almost 5%. Kind of tip to tail. So it's been a pretty significant move. But I think the important thing to note here, and I think that a lot of people, even before the Bitcoin conference, were saying, hey, we might have another pullback. Maybe we'll go to low 60s. This is probably going to be the last chance to get on board if we do get down there. And I tended to think, you know what, that seems pretty reasonable. And it can happen, but pretty reasonable. Now, I think I told you the other day that 64 was probably where it was going to stop. And it's not that I can, read minds, but look, this is where it stopped every other bloody time, right? This is just a natural support and resistance area. So it's just kind of normal. We'd expect it to come down to this area and at least pause here for a while, even if it did continue down. So we've had a little bit of bounce in the last few hours. Has gone up, $400 or $500. We'll see what happens. I don't really know if there's much to say about this except that when you do some live trading, we can show the liquidation heat map. We can talk a little bit about that, but I think both of us are a little bit wary right now of rolling those in the money puts to calls or strangles. Like, I don't mind strangles because you cut that risk in half on each side, but I think we're more inclined to keep them as puts.
Yeah. Do you want me to share my screen and show the trading book?
Here, let me stop sharing so it does, because once we had it screw up, didn't we, when we were both sharing?
Yeah. I just need to move this. I moved. Oops. Oh dear. I've moved my camera today, so I'm now looking at you when I trade rather than showing you my epic profile. All right. So since miner, we're using 17% margin, but we're earning no theta.
I don't see your screen, Richard. Are you sharing your screen?
No, I'm a doofus. Sorry.
Okay. Let's see.
Share screen.
And just so everyone knows, at the end of the call, we do a Q&A session for, we sort of chit chat with you guys for 5, 10 minutes, 15 minutes, whatever. So if you have questions, put them in the Q&A section, please.
I'm just going to zoom out back to so we can see. Right. So here we are. So two things to note. One is that in the week we tried something new on this account. We just wanted some upside protection in case things got ballistic. And so the way we did that was actually we funded a 70,000 call in September with a 90,000 call, or partially funded. And we decided that was okay because we are just happy to leave that on the book as a upside hedge, and we'll just keep on selling calls against it to pull in cash. So I think we're happy. I mean, it's lost us some money, but it's not significant. Then. Yeah, so here's where the action is. This is expiring tomorrow morning, 2nd of August. So we're short 3.3 of puts at 67 and 67.5, and we're short 0.2 calls. I think we bought back. No, we didn't actually. Nothing got bought back. And I'll just zoom in because people often complain now. So you're on 2nd of August here. And I think our feeling is that if you look at the calls, have extrinsic value of about 14 basis points here, and the cover is worth 6 basis points. But of course, we've got twice as much cover as we've got calls. So in actual fact, we're earning kind of nothing from this position now in terms of theta. I mean, a tiny amount, right? I think theta here is $27. Actually, that's quite a lot.
What do you mean it's a lot? It's not a lot.
I mean, well, given our normal theta is $50 a day for this account, it's actually quite a lot. Anyway,
with having those two, I get what you're saying now. Yep.
Mm-hmm. But so this is representing quite a bit of downside risk. Mm-hmm. So if you look at our margin matrix depot, so two jumps down. That's what's 7.5% down. Is going to cost us another 0.2 basis points. So not a lot, right? But we don't really want to give it away. So what I'm thinking, Shane, is that we just take these 67 and 67.5 and we just roll them like heroes to the 9th of August.
Like a hero to next.
So for the 67s, for example, we'll be paying like 352, which feels like a lot. But then we'll be receiving sort of 450-ish.
And you want to roll them to the same strike on the 9th, right?
Yeah, I think so, right?
Yeah, I think we can pull some bips out of it for sure. So I think the danger here is that a lot of times you get these moves, and the market tends to keep moving in one direction or kind of holding and scaring the pants off everyone, and then people capitulate and they start selling a whole bunch of calls. Yeah, and then it goes back up. And it's like, oh my god, I should have just waited.
Well, that's what I've been listening. When I woke up this morning at 6 a.m. My time, the market was $1,000 lower.
Yeah. I think I'm more happy to roll puts to puts or some to strangles, no problem. But I don't want to convert them to calls.
I think I'd much rather just roll them as they are. Obviously buy a bit of cover, and then just sell calls against them.
Yeah,
almost daily call spreads, something like that.
Yeah, and let's either address it now or at the end. So just when Richard and I we deviated a little bit from the strategy here by putting on that synthetic or that long call spread, but
that just gives us plenty of comfort, so we can now write call spreads like degenerates against these in the money puts, right? And just put yanking premium.
Yeah, the plan there is we're going to write calls constantly against it in order to pay for it. Now it was partially paid for by the call we sold, I think up at 90 or 80 or something.
Yeah, we paid. What did we pay for this? We got paid. 120. We got paid 120 for that 90 call, and we paid 645 for the 70s.
Yeah.
So they haven't lost much money. They've lost 120. This hasn't lost much value yet, but it will. I mean,
So we're going to sell calls, weeklies, for example, against it, or maybe every 3 days in order to 2 or 3 days. I think. I mean, so if we roll those 67s, is it? 67, 675s is what we have.
Should we do this now?
Yeah, let's go ahead and do it. We'll do it here and.
Okay, let's. All right, so 0.2. They're getting cheaper as we speak. I don't want to do it.
Man, how many times we've been in that position? Then it goes back down. You're like, shit! I should have rolled them.
I'll do one at a time.
Damned if you do, damned if you don't.
And I'm going to do one at a time.
While you're doing that, while you're buying back those short puts, speaking of Herman Melville, I think Vladimir said he's reading Godfather now. Paul commented, Godfather's great, more interesting than The Broken Monkey by Lynn Alden. Now, I haven't read Broken Monkey.
Actually, if you could address one of the questions in the Q&A section, because it actually says, why aren't we buying options? That was 67 we're doing, right?
Yeah, so Andre is saying, I'm starting to wonder if buying instead of selling options on Bitcoin would be worthwhile as it's so volatile from time to time. Do you ever consider reverse the strategy? Yes, and obviously we have, especially like at times when you get really extremely low vols, like last summer, for example, we're selling hardly anything, and you want to buy it, you just don't know when it's going to explode, and it feels bad because you're just burning through cash and theta every day where you're sitting there long waiting for it to happen. You know it's going to happen at some point. It's a little bit psychologically tough for people.
That was 345. Okay, so 340.
Paul's also go ahead.
They could even go. No, I'll do it the same strike. Yeah.
Yeah, let's earn the extra theta and see what happens. And maybe we'll be totally wrong, and the market will keep going down. And next week on Deribit Live, we'll be at 60,000. I don't know. Who knows? It could be at 70. Who knows?
Okay. I did 2. Oh, right. Okay. Well, I did 2, so I'll now just buy back this one.
But it's important to recognize that we're rolling these out in time, but we're keeping them. We're not rolling them down.
I've rolled the 6750s down to 67 because there isn't a 67500.
A slight down in that one case because there is no strike that's equated. But we're also selling some calls against it, not too aggressively, but also to chip into that.
So talking of the calls, so these 69 calls I can buy back, right? They're 3 bips.
Oh, absolutely. Yeah, let's do that. Get rid of that risk off the table and.
So I've got 3 puts and no calls, and we're long calls as well. So we really should be like selling four call spreads, I think.
Okay.
And we could stagger that over a couple of days. We could do one today, let's say 65.5. You feeling daring?
I think overnight I'm okay with that. Yeah.
Yeah. Okay.
Yeah. And just while you're doing that, Paul's asking me. Go ahead.
I'm going to cross the spread here like a degen, but
no, we got to push this in. We only got a half hour here. We don't have, it's not.
Yeah, exactly.
Yeah, but Paul's asking if we can see the Greeks, the total delta and theta. Yes, of course. Once we get this all sorted out, we can examine the Greeks. No problem.
Okay. So notice I've double covered that. It's just, the cover's quite a long way away, but I've just out of principle I've double covered it.
It's worth
it. And then we could do them for tomorrow.
That would be Saturday, actually. Yep.
Yeah.
Yep.
So 60. Try 65 here.
And what strike is that?
66. It's just 1,000 below our in the money calls.
Yep.
And we can cover this at, say, 70.
Is that about 8% away?
That's 6% over difference, yeah.
Yeah. Let's go ahead and do that.
I'm going to get 2 of those. I'll just leave that cooking for a minute, and then we could do like one on the 4th even.
What are the vols right there? As a 40, 44, I see. Yeah.
43, a bit grim, actually. And on the 9th, we're looking at 43. Actually, no better.
Yeah.
I mean, we could do 1. We could do 2 at the money here. Yeah, we could do 2 because we've got the long calls. Right?
And I think there's also a chance that those 9th, the vols could drop into next week. We get into summertime. Everybody holding off.
My expectation, I wrote in my monthly report that I expected the vols to drop this month. It's nice to be right now and again.
Yeah, every now and then.
Shall I do 2 here at 68?
And that's on the 9th?
Yeah.
Next Friday?
Yeah.
And how many of those short puts do we have? So we're balancing that out? Or
we have 3 short puts, and we're short 2 calls so far, and we're long calls. Okay. So I think we could at least write 2 here.
I think so,
yeah.
And we're going to double cover that,
yeah. Try and get this away at 100.
And for people who've been watching, when we double cover these, it's not something we do in TradFi markets. We do it in Bitcoin.
It depends on the market, right? I mean, triple covering the wings can be quite profitable on a volatile stock if the smile's not too big, right?
Yeah, I'm leaving volatile stocks out. I'm talking about kind of just sort of mainstream, but yeah. What was I going to say about that? It just makes it so much easier to adjust, and it dampens down those swings.
30, 70. I think let's do it here. We'll pay
68.
Pay 76 it's and then
it's
a little bit expensive, but better to be safe than sorry, right?
All right. So we'll need to push all these in order to get a good look at the Greeks.
Yeah, that's filled inside the spread,
and we need to cover there.
This one's being a bit stubborn.
Yep.
Oh look, they're going to make me pay the ask.
2 bips. That's
well. Okay.
All right. Fine. Look, our margin use is at 13%.
No, that will go up tomorrow, right? Because we've got short dated cover coming off tomorrow, which is very, very close. And actually, we should just buy this back, and we could sell this and get all the money back, and because we don't need it anymore, right? I mean, unless the market's going to tank.
Yeah. We'll get 24 basis points if we sell that right now.
I think we can use that money.
Or 28 if we got 7s.
They're not going to give us 7.
Yeah, we'll have to push it at 6. Yeah.
I'll leave that one in because it's worthless.
Yeah.
Let's increase the margin a bit, but now let's go and cover off these puts. We could go.
Yes.
Well,
10% down, I think, is reasonable. That's a week away.
Yeah, because we're going to pull in loads of value, aren't we? So 3 of these, come on.
You're like a commission generating machine for deribit.
Deribit love me. Yeah.
They're going to want us to do a live every day. Just trade the pants off of accounts.
Well, they're going to love this trade of rolling this 1 day strangle.
Yeah, every day.
1 day call spread, right? Yeah. Ching, right?
Yeah.
I'm okay with this. 24% margin use. That's not outrageous, given that we've had a 10% move.
Yep.
It's not too degenerate. And theta now is 56, back to our sweet spot.
Can you lift it up a little bit higher because our images
sorry.
Yep. So let's take a look. So I think I can't remember Paul who asked to look at the Paul wanted to look at the metrics. So let's just take a quick look.
Yeah. So the delta, because we're hedging into Bitcoin, the net delta is the one to look at. So the net delta is 0.14 Bitcoin. So that's 100% of the book's value, right?
Quite aggressive.
Quite aggressively long.
Yeah.
And our Vega is $5 per vol. That's nothing.
Yep.
And theta is a very nice. What about 70 basis points, 80 basis points of NAV?
Yeah, and we're going to get $22 of that out tomorrow, if I'm not mistaken, right?
Sorry, 50. Our NAV is 1,000 basis points. So we're half a percent a day we're pulling in.
Okay.
Yeah.
Theta will drop tomorrow by about $22. So
we'll replace it, right?
Yeah.
What are we earning off this position here? I've got a theta. The theta here they're saying is 288 minus 34, so 250 to $25. Yeah.
Okay. All right, let's go through some questions in the chat. We got 5-10 minutes. Let's see here. Vladimir, from my perspective, we are right in the middle of the range. I think there's a 50-50 chance we'll go future at the money. I think further in the money. Is that what you meant to say? And I do kind of agree. Although we're sitting on support, so I wouldn't be surprised. I think it's more likely we have a bit of a bounce. But low 60s, why not? I mean, it's Bitcoin. Why not? I kind of.
Yeah, cool. Well, look at the liquidation heat map. There's a bunch of liquidity down there at 63 and a half.
And the market likes to hunt liquidity, so
it's asking to be taken out.
Yep. And then Paul kind of confirms, 61 to 69 range, yes, exactly where we've been for months, right? So we're right smack in the middle. So I suppose it could be a bit of a dice roll.
At some point, though, all that FUD from Mt. Gox and Silk Road and all that stuff is gonna have gone, and then all you've got left is BlackRock just buying the entire mining output every day.
Yeah, and I think we're also noting that despite small outflows for a couple of days, IBIT is buying regardless every single day like a machine.
Yeah, look, I think these other ones, anyone who's not BlackRock doesn't really matter, right? Because they're just being used as proxies for hedging and whatever. But BlackRock is on a mission to persuade people to put their hard-earned money into magic internet money. And BlackRock tend to get what they want. They own all the housing stock in the US, half the farmland. They own you. You're a slave. You'll do what they tell you.
Boy, it sounds like we need a revolt. All right.
You're pretty revolting.
Yes, I am. Vladimir says, yes, paying 7+ fees for 5. Who cares about money? Exactly. It's a free-for-all. So Paul's asking, the target delta book value ratio, target theta.
We try to make 10 basis points a day on average. And we kind of allow the delta to move around. We're not too worried about taking a delta, particularly to the upside. We get a bit worried if we're short delta, right? Because of the fear of the market exploding up. But I think the delta we're tolerating now is probably the highest we'd be happy to tolerate, right? About 100% of NAV.
It's getting pretty. Now, the other books and strategies will manage a bit more delta neutral-ish. We're actually going to be introducing a new strategy for people who join us live stream, probably by next week, which is totally degen, but it'll be a lot of fun. And we're hoping to, instead of kind of option sellers, try to make steady gains. We're going to try to get some explosive gains there. So, of course, you can always check us out on Patreon or roguetrader.academy to follow us with that. Vladimir says another event which might turn on the sell-off is war in the south. Yes, 100%.
War in the south?
Well, I think he kind of means south, like Middle East, maybe. I'm assuming because it's a bit of a hot spot.
No one cares. No one cares about people dying in the Middle East. I mean, we've been doing that for decades, and markets like it because it means we can manufacture more bombs, print more money.
Yeah, and I think that we get a down and an up.
Yeah, no, come on. There was a down when the Twin Towers were hit, and then America went and attacked the wrong country. But then a massive up because they all realised that Raytheon were going to make shit tons of money. But I mean, the thing is, the Middle East has always been at war with itself, and I mean, the people there just can't help it themselves but kill each other.
It's just different levels of escalation. It's always in a state of some type of turmoil. It seems. I remember during 9/11, I was trading. I was on a big trading floor with dozens of other people, and all my short trades got backed out.
Oh, yeah, really?
Yeah. Anytime you had an event, and if a market maker or an institution felt that that's not really fair, we didn't know, they'd back your trades out. And guess what?
It's rigged.
They won't back out your longs. You take all the losses, but you'll never take the gains. It was a very dirty game.
It's a rigged game. Yeah.
All right, Andre here. Let's blast up some questions. I'm starting to wonder if buying instead of we already talked about that. Yes, we are taking some long call spreads. We talked about that. Gene, how to quantify vols before an event to be overpriced? Or good question.
Well, that's where the magic of my volatility strategy comes in. Systematic vol strategy.
Your salt lamp, but okay, yeah.
Well, there's the salt lamp. Also, the phase of the moon.
Yes, I forgot. We're going to talk about the phase of the moon, weren't we?
Yeah,
so
we are
go ahead.
4th of August, 3 days' time is going to be a full moon, and a full moon always means market goes up.
There you have it.
No, and if Bitcoin goes up, vols go up. So for the next 3 days, vols might be overpriced or priced okay, and then for the week afterwards, I would expect them to go up, so they'll be underpriced.
Now, people are wondering right now. They're like, "Are they serious?
Does this guy really trade for hedge funds with using the moon?"
You'll never know.
I use it as a 2% influencer in my prop books, but and as a comedy prop for our broadcast. But actually, there is some research which says that full moons are bad for markets and new moons are good.
Well, talk to anybody who works in a hospital.
Right.
Big difference on a full moon. People go.
I was going to say we use a combination of machine learning and historical statistical analysis, and we measure people's behavior and how vols move compared to market participants' behavior and all that stuff, hedge fundy stuff. That's the technical term.
Question for Paul: is the theta number literally in US dollars per day earned from time decay? That's actually a very good question, because it's confusing for a lot of people, because that theta moves around. They think, hang on, if I sold something for 20 basis points or 200 basis points, shouldn't I be receiving? How can it change?
It tends to be accurate if you're at the money, but if you're out of the money, it's not accurate, because you get smile effects, because you're not only as you come forward in time, the smile gets tighter in terms of strikes. And so the smile gets steeper. So you actually end up, as your position rolls towards expiry, its volatility increases. So your theta gets offset by the increase in vol. So you tend not to earn quite as much as the screen says you're going to earn until the final day. We should do a lesson on that. I think, for our advanced students.
Yeah, it sounds like something.
But actually, when we're trading prop like this, a reasonable sort of proxy is to say, look, how many bips is it worth? How many bips will it be worth on expiry? Divide by the 2, and okay, we're earning 6 bips a day on average, and that's kind of a rule of thumb that we use, and that's kind of good enough inside a month, right?
Yeah. And when you're trading a book, you need to pay attention to things like that. But if you're just going to trade positionally, if you're going to have a flat account and just, it makes a big move and you decide to take advantage of it, you're just trading that. You're just trading based on price. So it depends how you want to look at it. Question from Jonas. How do you roll an in-the-money call that was just sold against in-the-money put, just out, and at one point it straddled on the later expiry?
How do you roll in the money call that was sold against the money put? Okay, so in the money call versus an in the money put is called a gut. It's kind of like you're exposing the guts of the trade. And
you can think about it like in a butterfly, like you've got the guts, right? You think about that center of a trade, right?
And so the sort of classic way to get out of this position is to roll the call and roll the put up a strike or down a strike, so that the gut gets smaller and smaller and smaller, and eventually becomes a butterfly, and then, providing the market doesn't take you from behind,
it will,
which it will try to. You gradually roll them apart, and then get rid. In reality, it never works that way. What happens is one gets deeper in the money, one doesn't, and you end up rolling 2 of one against the other one, and eventually pulling in enough premium. And at some point, it's often better to say, okay, I've actually got profit from this crappy trade, even though it's all in the money. I've actually pulled in so much premium from this that I might as well just let that damn thing go. So there comes a time when you just think, nah, screw it, we can't rescue this. But you want to try and pull in premium while you can to mitigate the loss. Or but if you're lucky, they'll be inside. You'll pull them out, and then they'll expire.
Question from Volodymyr: What I noticed recently is that taking off risk from the table in case I'm planning to roll my position is a good idea, but I'm not decided at which moment I should do it. What's your advice in this case? For example, sold for 100 points, buy back for 20 and roll, or maybe 100 into 10 and roll. Where this line should be?
Well, if you're going to be shorting options, you want to be hunting. And I'm actually about to write an algorithm for this to actively hunt. So my thinking is, you want to be, if you're going to buy anything back, you're looking for anywhere else on the vol surface that's going to give you better value. So if I can buy back a thing that's earning me 10 basis points a day and sell a thing that's going to earn me 11 basis points a day, then to me that's a good trade, because I'm obviously increasing my income by 10%, right, or notionally, at least from the vol. So at the moment, if you look at the vols for the expiry day, at the money vols are 50 and a half. If you look at vols for the weekend, they're 47, and vols on Sunday are 43, and then next Friday vols are 44. So actually, right now, if you're at the money and you've got positions expiring today, like we do here, the 65 and a half, I would say probably leave that go, right? Because that's earning you 57 basis points a day. You're not going to get that anywhere else. So you may as well eat it, and you've got like a 40% chance of being made to eat a shit sandwich here, but kind of worth the risk, right? And I can always roll it out another day. But if I was going to roll this out somewhere else, then I'm looking for 50 vol or 55 basis points a day. Well, I'm going to have to really hustle to get that. There's nowhere I'm going to get that kind of cash, right? Even if I go out the money at the end of the month, which is 28 days, I'm only going to get 461. That's 20 basis points a day. So it's not worth the roll, right? So I think here my feeling is I roll this when I have to, not because there's no time when I want to. Unless I've got a strong view about the market going up, in which case you may as well just buy it, right?
Last couple of comments. We got to go. We're running a bit over time. Sorry, everyone. Constantine. Yes, Constantine did mention we didn't close the gap on the CME futures on the 1 hour chart around 59,000. Maybe true. I don't have that up, but we try not to talk too much technicals on here. Every time we do, people get angry at us. Literally, they say, we don't want to hear technicals. Fine. Okay, we won't talk about technicals.
I just realized I did that demonstration without actually sharing my screen.
I didn't know if you were.
Hopefully, you all visualized me.
I think it was clear. You're saying, what the vol is now versus the next day, this next day versus next week, and you could see there's a difference. So, sorry. Nick found a whole chapter on financial astrology in Kaufman's Trading Systems and Methods. Excellent discovery there, Nick. Now, I don't know if I've read. I have that book. I don't know if I've read it all. And in fact, I've got it on my tablet right now. I should probably take a look at it.
I think the research paper I read says that if you buy stocks on the new moon and sell on the full moon, you'll make about 0.5% above the market.
Yeah. Nick had a further comment. He said, "This isn't voodoo, folks."
No, look, people. The full moon causes more crime. Causes my wife to go crazy. It causes all kinds of stuff, right?
Speaking of crazy, so we've got the synth miner account where we're mostly selling puts and put spreads. We do other things too to offset. We have depending on what happens, but we went a bit crazy a couple of days ago on our live stream with our members, and we added in this long call spread, and then we're selling short dated calls against it. And it just struck me all of a sudden. I was like, holy crap, what are we doing? This isn't the synth manager's strategy. This is something we do in just our discretionary books. And the reason why this happened is Richard ate meat. Oh, I'm serious. He was vegetarian for years. And he decided to have some meat, and he went nuts. Like he literally started doing all kinds of stuff. I didn't really know who this was. I saw Biden, and you see like this guy is not this guy. There's got to be a double in there. It was like that.
To be pedantic, I had a heart attack 3.5 years ago, and since then I've been absolutely Spartanly vegan. I don't eat any seed oils or meat or animal products at all. And in fairness, my cholesterol has gone down from 200 to 69. and a newborn baby has a 65 cholesterol. So there is that. Anyway, I was don't know why. I was just feeling. Well, I was just out with my wife and family and some friends, and we were in a Tex-Mex diner, and of course there was nothing there that was vegan, and if it was covered in seed oil, so there was no point. So I thought the least damaging thing here would be some nice steak quesadillas, which were epic. But I maybe go from being reflective to being extremely aggressive. And it was lucky because on our Dirty Bird, I sold a load of call spreads, which is great news because we made some money from that.
Yeah, I like the new angry, aggressive Richard. I really like this one. So it's great. It's like these steak quesadillas are like a gateway drug, So it's like just a little bit, and then next week, who knows what he's going to be doing, folks. Anyways, hey, we've run about 10 minutes over time. Thanks everyone for hanging out. A lot of great questions. A lot of interesting stuff happened in the markets. Let's see what happens this week, and we'll see you next Thursday.